All right, well, hello and welcome to Stock Market Mutterings for October 4th, where I promise you I will take a grope in the murkiness and try to find you some quality trade setups. Before I start, if you guys need help with your trading, visit thelincolnlist.com, click on the Trade Room tab, and you can start trading with us right away. Now, did we not see some murkiness today? I mean, the market was just selling off like all morning. It wasn't until late today they got the BTFD going on. But this has been a little while since we've seen this type of selling. Now, if you look at this bottom chart, here's what I want to draw your attention to. The Qs, the NASDAQ, was a little bit worse than the SPY itself. But this red line right here, just this bottom red line, excuse the mess that I've got on this bottom chart of the SPY. This is a trend line I drew from one of the last mutterings that we did. But this bottom line right here is the 50 moving average on a daily chart. I don't think we got down to that area till right back here, which was July 3rd. So that's the last time the market got a sniff of the 50 moving average on the daily chart. And you can see there today, I mean, just yesterday, the thing was a few ticks away from all-time high, confirming a double top breakout. And it was like a snap like that from the fade yesterday right into today. You just kissed that 50 moving average. Now, this is always a good level for the market, and it's always a good level for stocks. A lot of traders, a lot of technical analysis traders use that 50 moving average as a guide. And you can see that normally when you get down into that level, you get some sort of defense. Now, this bounced pretty solid off of it, but they don't always bounce solid. You know, sometimes it's a weak bounce, but then that's a completely different story. And I'll pull up the Qs here. It was a little bit worse. This thing really got hit and actually was underneath of the 50 moving average for a little while. And that goes all the way back. You've got to go back into May here. Yeah, way back here into, on my charts, May 4th, before you get to, before you get to that 50. That's important. Going forward, if you guys are trying to look at this market, wanting to know if this is going to continue, how this is all going to play out, pay attention to that 50 moving average, because those indices fought real hard off the 50, slightly closed above that. So you're going to have to pay attention to that going forward. As we always say with support and resistance, the thing to keep in mind is the further that you go back in time, the more relevant that number is. So when you're talking about the Qs here in the NASDAQ, you're going all the way back to May. So that's substantial time in the past. And if it loses that, then you could start to see some aggressive selling. But that's completely different. Now let's talk about what we did today, because it was green, and green is always good. We grinded out another day. So that's 4 days here, all 3 of them green, 1 little small red. And we patched together something pretty nice. And we're going to talk about some of the stuff that we were talking about yesterday, and we'll go from there. And then I'm going to give you a little education about reversal trading, what I think you guys are going to like. Let's start out with Ameren. Now, this was definitely on the list. I said I really like this stock, especially if it got pressed back up towards the highs. Now, one of the, I don't want to call it one of my favorites, but a trade I do like is anytime you get a gap. This is one of my better trades that I use during earnings season, or just when you get a general gap on a momentum stock. Anytime that you can clear pre-market highs, you usually get the gap and go. So you've got this thing right here that was pretty strong yesterday. So once it's strong one day, it's already on a lot of traders' radar. And then you get just a really tiny gap, which was, I'm going to draw, just look at the upper chart here. This is an intraday 5-minute chart. And I'll show you what I'm looking at. And you got this upper area right here. The peaks from pre-market, which I think is, let's just say it's 19 bucks even to make this easier to follow along. Usually if you get a nice early cross with that, you can get a nice vertical, really strong, powerful move right out of the open. Same way if they flush. But you get this nice move, and the only piece of resistance that you had in the chart was the previous high, which was just right there at 1922. So the real number was 19 to get it confirmed, 1922 to really send it. And you see what happened. As soon as it gets a little bit of volume right there in the morning, and it goes straight vertical to $20.50. You'll look down there on the brokerage statements. You'll see the trade just like we had outlined it yesterday. Now, the reason this works a lot in the morning, it's going to be a trade like this that goes through pre-market highs. You'll see a lot of this during earnings. The reason that these work out better is because you got so much emotion. And when they start running, you're really going to get that emotional, I want to say the emotional chaser. that you're going to get out of the market. You remember, that's the market's so emotional. You got all kinds of different money being thrown at it in the morning. You got all the people says, I'm going to get up tomorrow and I'm going to nail this hammer. I'm going to make all this money. And then they chase it, and you got all that volume. You got all these people that are interested, and you got all this emotion. Therefore, you have enough volume and interest to support that move. So you generally see a nice vertical. Again, that was really the only trade there for me on it. I got the spike. And then when things get heavily heated up like that in the morning, the RSI gets a little steep out of the open. All that emotion gets piled on. I usually take my profits. Now, in this case, because it was breaking out also, not just intraday, but if you look at lower, it was breaking out on the daily chart too, which was 1910. So as soon as it took that out, well, it was also a daily chart break. So you had like a multi-time frame breakout, which adds a little bit more credibility to the quality of that breakout. So I decided to leave a little bit on the table, which I sold for a little lower than I did the first partial. This was a good trade, and that was the first one out of the gate, which set the tone really, really nice for the remainder of the day. Now, the rest of that was compiled with trades that I love the most, which is by far are these reversal trades. Now, I've done a few videos. I'll probably spend a little bit more time on this some other day when I can do something like a whiteboard. But I want to talk to you about reversals, because the thing that traders have misconceptions with when it comes to reversal trading is they just look at it and say, it's up too much. It's down too much. It's got to bounce. Remember, the market doesn't got to do anything at all. Oversold can get way more oversold, and overbought can get way more overbought. And like they say, I don't know what they say. I was going to try to make a quote, but I'll probably just mess it up this late in the day. There are two main things that I look for in a reversal, and that is the range of the stock and then a support and resistance level. So range, when I'm referring to range, what I'm meaning is when a stock has reached a level that's beyond what it normally trades in a day. So I'm going to draw your attention to Lulu, because this was the first one out. It's rare that you have seen in this chart, when you go back and you look throughout this chart, you don't have too many days. You just look at these candlesticks on the bottom chart. These are daily candles. Look at the size of these. These may be $1.50 to $2 maximum. So that $1.50 to $2 is what I refer to as range. So anytime you press beyond that range, let's say it goes up $4, that's a little high. Now this is barring, an upgrade, barring earnings. That takes technical analysis out of the equation, I think, sometimes. But just on a regular day like this, when you're getting some selling and you're down 5, that's pretty big for Lulu. So the first thing this thing does is panic flushes in the morning. And generally when you see that, you're seeing just emotion. Remember, that's emotion we talked about. Just like in Amron's case, it's going to the upside. Here it's going down in the downside. Now, usually when they go down, it can be a lot more violent and aggressive, because the panic emotion is far more powerful than the greed emotion. So people react and do much more bizarre things out of panic, and they just jump out of it. This thing got down into some pretty good support right there out of the open. We got into the lower levels from 927. As soon as it was dumping, I was telling everybody in the room, look, if we get down around the 150, 57s, 58s, I'm going to go in with a little starter position. And it just bounced right away. Now, usually when you do that in the morning, when it's the first trade, you'll get that quick snap knee-jerk reaction reversal. Either shorts will cover into that move, or people will buy it up like we did, and you get a pretty sharp move. Now, it's 50-50 as to whether or not sometimes these things go back and fill in the gap, or they retrace and make another low. And that's exactly what this thing did. So when it recycled back and went through lows, we just took that same very trade and just did it over again. And said if it gets back down into the next level of support, which was that original 157 that we talked about earlier, we'll try it again. So we got 2 on that Lulu, which was a really nice trade. So I'm pretty happy with that. Now, I did try that same ordeal with Roku, because again, you don't see Roku down that much. ROKU. This one just couldn't quite get out of its way. You see it washed out here. We picked it up at 68. Again, looking for that support, and that support goes back to 912. That's where we were looking at, around 67.5 to 68, and it turned out to be a scratch trade. I mean, I can't complain. It ended up going a little bit lower, but it just didn't quite have that. So when you're looking at these, remember, the way to trade these reversals is not just to look at something and go, damn, it's up a lot, we got to short it. That's one reason to start looking at it and putting on your radar, like our BA short, which we just covered here this morning. That was also pretty nice. But we've been talking about that for days. The daily chart's what drew our attention to the fact that, hey, look, it's short-term overbought. That doesn't mean that we think this is a pile of crap company or in 10 years this thing's not going to be trading at $400. No, we're traders, we're trading ranges, and that's what we're all about. You just look at this and you say, look, it's getting overbought. Now from that period, I need to start putting together an idea and a plan. I need to start looking at numbers. So if it goes to here, I'll do this. If it does this, I will do that. So when we look at stuff like Lulu, you know, the market already kind of dictated the direction that we were going to go today. And that was going to be playing these reversals. Now, I'm not a fan of shorting stuff in the hole. I've never had success with that. And when I say shorting in the hole, that means bear flag shorting, low a day shorting. I know a lot of traders have had some great success with that, but I have not. So I stick with what I know. And reversals have been one of my very best trades throughout my entire career, and probably ones I made the most money on. And I've mastered a strategy like this over the years. And that's what I can tell you that I've learned the most about it. It's not about just whether it's overbought or oversold. There has to be a setup and a method in there. And that first thing comes from support and resistance. So think of this the next time around. When you're looking at something and it's diving, you may actually have a position in that and you're wondering yourself, should I bail? Should I get out of this position? Or should I keep it? Or maybe you want to buy it and try to reverse it and you're looking for that entry. Go to the next support level. Where's the last spot that stock bounced? Where was the last part of interest, the last number? And then you go from there. And remember that the further that you go back in time, the more dependable that number is and the more important. So if it was just 10 minutes ago, well, that's cheesy. That's just cheesy support. That might not hold. If it's 8 years ago, well, damn, that's pretty solid. That's a really, really important level. That goes back to what we were saying there just at the beginning. This level that you got down here in the market is a little sketchy. That 50 moving average, if you're a bull making a bull case, it's got to hold up in that area. So this was a good day. We did really well with the reversals. We didn't get that snapback move that we normally got. I mean, there's been a lot of cases where the market has gone red to green. We did Wayfair yesterday with that kind of method. TTD a couple of days before, if you guys have been religiously watching these market mutterings. So we'll see how that goes out. We'll see if there's another flush. Prepare yourself for some down area. Get a plan together tonight so tomorrow you're ready if that situation pans out. Now to go forward, here is what I'm looking at. Here's definitely what I'm looking at. I do want to look at this Ameren again. It's still trying to go high. Yes, I understand this daily chart is really stretched. So when you do that, you've got to be very particular about where you enter it. And for me, it's just a scalp only because I don't think the daily chart allows you to be flexible with pullbacks on this. But if you get through this double top through today, which was $20.50, I have no reason to believe that the momentum that it's under, take a look at the chart I have no reason to think this thing might not make it to 22 bucks just for a trade. I would not bag this thing and hold it overnight right now. It's just a little too steep, but maybe that's your thing. I don't know. I do like that one. And I'm a little bit interested in Netflix. You know, we did this one here late in the day. It was for a $2 ripper. It got down in here. It was just a really good trade. Again, the same thing. Looking at that 20 moving average on the daily. You got this spot right here. The lows from 924, which is also the 50 moving average. I'm drawing it down at the bottom. 355 is a pretty solid spot. So in the event that this thing gaps down and flushes to 355 tomorrow, I would be a little bit more of a stronger buyer down there with a little bit more size on that. That's a really solid area. And you'll probably, get a nice little bounce there. So we'll take a look at that. We'll look at Netflix tomorrow for a flush right at the open. And then we'll take a look at this Ameren to go through highs. But remember, when you're trading these reversals, even if you don't trade them, they're very important for you to understand what support and resistance level is. Job number one. Support and resistance. Where are buyers interested? Where are sellers at? You need to know these things because you're always going to be in a position, and that's going to be the thing. Either you're going to be in a position that is not doing well, and you need to know whether you should cut it, and you're going to have to say, where's the next support? Should I cut it now? What should I do right now? And then that's the decision you make. Or You might be profiting and you want to know, when should I take the profit? Am I taking profit too soon? Am I cutting my throat here? What is it that I'm doing? Look at the next resistance. So that's what you get with screen time. Support, resistance. That's what it's all about. Where are buyers? Where are sellers? So let's leave it there. Let's take a look at Ameren and Netflix. They may not work out. That's why you should join the trade room. As I said, click on the trade room tab at thelincolnlist.com, because we have a complete pre-market recap every day where we talk about all this stuff and all the stuff that comes up in pre-market, and we give you a nice little game plan on how to start trading. So check that out. Until tomorrow's Market Mutterings, I thank you very much for watching this. Show your support by subscribing to this channel. Take care and trade well.